Welcome to DF Markets, Support and Resistance. Support and resistance sit at the very heart of technical trading and are the most basic way of helping us identify key levels of order flow in the market. Support basically refers to a level in the market from which price is expected to bounce higher, and resistance refers to a level in the market from which price is expected to reverse lower. The levels themselves are created by supply and demand in the market. A build-up of orders to buy, known as demand, creates support, and a build-up of orders to sell, known as supply, creates resistance. The image shows an example of support and resistance in the market. You can see that support is essentially a level where we can join up a series of price lows. We know from how price has bounced at this level in the past that there has been strong demand there, and so we can anticipate that if price trades down to that level again, it will continue to act as support. Similarly, resistance is simply a level we can draw in where we can identify a series of swing highs that line up. We know from how price has reversed lower from there in the past that this level is seen as strong supply, and we can anticipate that if price trades back up to that level, it will continue to act as resistance. One very common way that traders use support and resistance to trade is to fade the levels. Essentially, this means that when price trades up to resistance, you sell, and when price trades down to support, you buy. Traders will often fade the range, as it is known, when clear support and resistance can be identified, and keep doing so until the range fails and price breaks. One very important aspect of the nature of support and resistance is that the levels are changeable. When support is broken, it will often become resistance when retested from the underside, and similarly, when resistance is broken, it will often become support when retested from above. The reason for this is because the demand has to be strong enough to break through the resistance. A residual level of demand remains at this level, and so when it is retested from above, it becomes support. Similarly, the level of supply that is strong enough to break a support level leaves residual supply in the market. So when that level is retested from below, it becomes resistance. This dynamic creates trading opportunities, where a trader can buy broken resistance turned support and sell broken support turned resistance. In this image, you can see an example of how this dynamic works. You can see initially we have a strong support level in the market, where price has repeatedly been sent higher as buyers step into the market. However, after several tests, the support level eventually gives way as supply overwhelms demand. Notice what happens when price trades back up to retest the level from below. The supply that was strong enough to break the support level remains active, and now the level works as resistance, sending price lower.